Hello, viewers. I welcome you to another episode. Today's date is on the 5th of January 2025. It's a brand new year. Um, Today, I'm going to be performing the topic I titled Technical Analysis of GBP USD. All right. Now, we're just going to analyze GBP USD pairs for the week ahead so that we can know where to position what we should be expecting as market opens later in the evening. All right. So you just sit back, grab a cup of coffee, and be very, very attentive so that you can know where the opportunity lies. All right. Okay. At this point, before you do anything, as we are stepping into a brand new week, please, for the fundamental analysis, like as I've taught us before, use forestfactory.com. Just go to forestfactory.com, you go to calendar, you see what the news that are ahead for the week. All right. Personally, I don't trade news. As a matter of fact, you will see most times fundamental analysis always align with technical analysis if you know what you are doing. So anytime there is news event, you just see a very sharp push to the upside or push to the downside. Whatever the case, it's just going to be 1 or 2 minutes and that's all. So me, I'm not interested. But for the fundamental analysis, for you to stay updated, to know what is going on, in the area of the country's currency that you are trading, you need to always open your Forex Factory calendar to see what is going on. So that being said, don't forget, if you have not subscribed to my YouTube channel, or you've not visited my website, please, this website, you should go there, visit this website. We have different packages. All right. We have different packages. Choose the one that you like so that we can train you. Trading is very, very interesting one, but if you are starting it for the first time, it's stressful, and that is why you need a mentor like us to put you through. Like I've promised us this year, I'm going to simplify trading even the more, all right, for us to really understand. Now, let's get down to business. This is a technical analysis of GBP USD. Okay, like as we all know, before Christmas, this was the trade that we took, all right? That was on the 20th of December. All right. Price push to the downside like this because after our analysis, this was the last um, previous low. Then there was a pullback. Then after this pullback, there was a sell off. All right. After the sell off, there was a break of structure. Now, why did we now enter the trade? We enter the trade because this sell-off has already broken a structure here, meaning that we are expecting price action to create another low, which it did. And when we saw the push to the upside, that is the retracement, a moment of relief, retracement as you can call it, or you call it pullback, is the same thing. What we then did was we brought out this what we call Fibonacci retracement tool. This is the last high. We call it a strong high. Why? Because it broke structure to the downside. All you need to do is plot your fib from the high, because it's a strong high, then drag it down to where the low, the where we drag it down to the current low, which price has created. It has created a low, and what now happened? We waited for it patiently for it to trade to have a pullback to a level where it will find support. All right, like I've taught us before, all these Fibonacci level 23.6, 38.2, 50%, 61.8, 79%. All these things are reversal point. They are reversal point. From 50 down, all right, this is a premium. From 50 up is discount. All right, these are the discount level. Now, when you want to buy something, you want the price to come down, all right, so that you can buy low and sell high. All right. But when you are bearish, you like the price because you want to sell, all right, because you want to sell to buy, all right, you want the price to rise. All right, that is just the the techniques that we need to apply. All right, we need the price to rise up to a certain level above 50%. Then, once we see any hesitation, anything above 50%, once we see any hesitation, then we will now look out for a reversal. All right, the reversal could be evening star formation where you have a bullish candle followed by a bearish candle, or that bearish candle can be a dodgy candle, then followed by a bearish engulfing candle. You see the bearish engulfing candle, we just the momentum from the start, you will just know that okay, sellers, they have taken over. You just see a swift push. You see this big candle is a confirmation that price is now ready to come to start coming down. All right. So once you see a push to this to the downside like this, all you need to do is for you to wait patiently for this candle to close. Okay, you wait for it to close, and once the candle closes, as the next bar market opens, you enter. That was what we did, and from that on the 20th of December, which was on Friday, we entered and we waited for price. It was just rigmaroling, which is normal. And I told my team, just be patient. Allow the allow market to do the rest. We have done our analysis and our take profit is 27 negative 27. That is our take profit. All right, negative 27. So uh we're expecting to gain 160 pips. All right, 160 pips from this movement. All right, because the overall movement from here to this place is because the overall movement one moment because the overall movement one moment because the overall movement started from here to this point. So we were just waiting for price to come and hit our take profit. So it takes time, and at the end of the day, price was just rigmaroling, and price did created another high here, which I told us that since you have missed, or if you have missed this opportunity to join the market, now price action has presented to us another opportunity. All right. To be very sincere, it was at this point that day, and I told us price action has presented us with another opportunity. So Now, what happened? It just came down a little, it pushed up again before it started selling off to the downside. What happened? It created equal high. So if you had entered from here, I tell you, you would have been able to join the moving train. Now, at the end of the day, price came down. When it created this high, what happened? It created an evening star formation here before it started selling off. What happened? Then it created equal highs. It then broke structure to the downside. Our take profit was hit, then even pushed to the downside to create another low. You see, this low has been violated, is gone, so we now have a new low. All right. This new low now simply means that the area we are now trading on now is what? This high this is now a strong high, while this is now the new weak low. Like I've told us, we trade in trading, we always move from the strong high to push and break this weak low. That is how trading is all about. We trade from the strong leg to take out the weak leg. That is how we say. At this point, there was a break of structure, even though internally there was also a break of structure, but this is the major structure. This point here, there's a break of structure, yes, but is the major this is the major leg, all right? This is the major leg. You can see this is the low that was violated. Now, price has created another low. Guys, now, here is the opportunity. Where are we trading on now? We are now on this leg and this leg. This is where this point here, guys, is the opportunity that has been presented to us now that we need to take advantage of. All right. Now, what we need to do is that we now have to take out our fib from the high. You can see from the high to the weak low, from the strong high, all right, to the weak low. Guys, follow me. This is how to trade. This year, you don't need to struggle once you follow me, but mind you, subscribe. You must subscribe to my channel. And when you want to be, if you really want to know in depth of how analysis is being done, and if you want to really know how to trade effortlessly, all right, you just need to inbox us, all right? Go to this site, all right? Choose a package, all right? Contact us so that we can train you. Because right now, it's not everything you can get, all right? You cannot get everything. So contact us so that we can have you trained, so that you can be able to stand on your own and trade without you following crowd and be waiting for signals. All right, no. This year, tell yourself that you will not follow crowd. You want to be able to do it yourself. That is being professional. All right. Now, now that we have plotted our fib from the strong high to the weak low, all right, what should we be expecting? We should be expecting price action to trade from this level, all right, anything above this 50%, all right. If he gets here, one moment, if price gets to this point and he found support, because you can see it got to 23.6. It created a little consolidation, then it broke it. So at this point now, price is reacting to this level, right? It's reacting to this level, this level, all right? This is what price is reacting to, all right? Even though you see, you might be thinking, oh, it wants to come down. All right, let it come down. But I tell you, you don't need to enter even if you see price pushing to the downside. Allow, because we need to filter signals. All right, that is what makes us professional. We need to filter signals. All right, now if you are following me, before you get on to this trade, wait until price hits up to this 50%. Once it gets up to this 50%, just be planning yourself to get involved in the trade. Does that mean that once it gets here, you should jump in? No. You must see a reversal pattern. All right. Now, once price get to this point, once price get to this point, this 50% level, this 50% level, or 61.8% level, all right, at most 79%. All right. Now, once it gets to this 50% level, you watch out. Price will go like this. Once you see price creating equal low, price will create equal low first, then it will now break the structure to the upside again. All right. Then from here, it will now give you a formation that will trigger the sell to the downside. Does it happen automatically? No. It takes time. That is why you must tell yourself that trading, you must learn patience. All right. You now see, you can see how long it took us, about 2 weeks before we hit our take profit target. All right. That is what trading is all about. Once you have done your analysis and you know where you stand, you just allow the market to play out. You don't need to do anything. But there is what we call trade management. So you also watch, check your trade at every point in time to know what is going on. All right. Now, in the overall, we are still bearish because price has created a low. All right. Now, this is a strong high and this is a weak low. Now, because we are still bearish, we are expecting price to pull back, then resume the underlying trend. We are expecting this pullback. All right. Once it's terminated, then you will now see a sell-off to come and take out this low. But we don't control the market. Anything can happen. The only time you will know that we are now bearish, we are now bullish. I repeat, the only time you will know that we are now bullish is when price come, instead of selling off from this point to come down and resume the underlying trend, you will now see price trading above this level. And once this strong high is taken, then you will now see a retest. We are now bullish. Once price trade above this strong high, once this strong high is violated, we say change of character. And once that thing happens, we are ready to change our directional bias. That means we'll be looking for buying opportunity. But as it stands, we are still bearish. As long as this strong highs remains, we are still bearish. Thank you.